Well, let's get some fundamental analysis going. Prakash Diwan joins in this Friday morning. Hi, Prakash. Good morning. Good to see you win. What's your view on the real estate space and what do you like from there?
Good morning, Nigel. So I think, it's going to be very stock specific, very company specific, because real estate is, end of the day, location specific. But you know what seems like happening is that the luxury market would probably come into a steady state kind of a growth phase, whereas it's probably the mass affluent market which could probably see some sort of improvement in demand. But it's too early to call that out. And if you look at what's happening in Bangalore or even in the south or at large or even in Mumbai, things are not as robust as what you had last year. So if you want to play the real estate market, it's better to do it through the cement and tiles and fittings kind of a path rather than directly into real estate. The only company in NCR which I have always found to be very promising, given its portfolio and the way it's grown in the last 2-3 years, deleverage itself and whatever, is TARC. That's a small company called TARC, with an offshoot of the earlier Anant Raj family, and you will find real estate being very as I said, location specific, and at times you end up having to look at very small names. So that's the only challenge you have, and then of course it comes with its own share of liquidity issues and all that. So but by and large, nothing very stellar in that sense. Even Signature Global, with all these numbers, hopefully it's good for them that the P multiple will start kind of looking reasonable because it's so well priced. So that's what the market will wait for. They'll wait for the earnings to catch up where the P re-rating has already taken place last year.
Okay. Hi, Prakash. Good to have you on. So that's on real estate. Yesterday, we had actually a very long conversation on defense. We were recording a different show. And then I remembered some of the names that you always speak of. I remember you telling us about DCX Systems, for instance. This is more about now tactically from here, what do you buy? Because look at where the stocks have gone. All companies, whether it's PSU, whether it's private names, whether it's something like a solar. So has it become a little too hyped? Is this the time to actually stay away and then go back in later? What would you do with these defense stocks?
Good morning, Sarvi. No, you're absolutely right. It's a tad too late to do it. But given the fact that the government is very smartly positioning itself, the administration is positioning itself as a major success story in terms of self-reliance, moving to global supplier kind of a mode for defense equipment. And remember, there's a huge anticipation of defense budgets going up, whether it's Europe, whether it's even the Middle East. So a lot of these countries will start turning out to be buyers, but for our companies, the P multiples are still a stretch. It's 70 plus, 80 plus for some of the big names. While, of course, you have reasons to validate that, like an HL with 60% plus margins will deserve those kind of things at some point. But there's no value at this point in time. If you see a correction in the market, which could be due to other reasons and not related to our economy slowdown or whatever, then it's probably an opportunity to wait. The simple logic is that there'll be a huge expansion of the market. There'll be many more players. You'll probably see some very smart IPOs come through in the next 12 months. And once that happens, you'll probably have better choice. But the existing names are a bit overdone. So be cautious about that for sure. You could always look at buying on dips, because this is something where it's a secular 5-year, 10-year story. It's not something which is going to fade away in a few quarters. So it has runway. But don't overpay for it is what I would feel.
Let me get in Prakash Diwan into the conversation. Prakash, yesterday Tilak Nagar, the numbers were good. The stock was bursting up. Today, in fact, we have Allied Blenders. The numbers look pretty okay as well. Any pick you have from this alco beverage space? I'm not talking about what you could be sipping later in the evening, but in terms of a stock call.
So, Nigel, I think given the turbulence, or rather, in spite of the turbulence around United Spirits, I think it still holds its way. It's very clear that the FTA, UK FTA, once it starts kind of getting into effect, you will see a lot of things changing under the Diageo label. And that's something which could kind of be very, the company's been preparing for this for quite some time in terms of, whatever they did domestically in terms of premiumization and all of that. So I would believe they will either make money on marketing some of the imported brands, or, they could also start using India as a hub to export certain, brands or certain parcels of, segments of whiskeys, which is something which a lot of the other players are finding difficult to do. So I would stick to that, and of course it's probably one of the most resilient. There are lots of other names that keep kind of flashing good quarters here and there, but I would not really dip into it at this point in any of the stocks. But yeah, I mean, United Spirits is probably what makes the grade very simple.
Okay, by the way, the stock to focus on, Allied is surely one, which is up 9% in the pre-open. Look at Keynes Technologies. This increase in margin, I mean, the margin has gone from 14.9 to 17.1%. And this increase seems to be going down, of course, pretty well with the market. Stocks holding up. PB Fintech was another good set of numbers. Solid numbers from PB Fintech. That stock also in the pre-open is looking fairly good. 10%. That's what we've got going. Prakash, just before we let you go, any other thoughts on a lot of these other earnings that have come in the last 24 hours? PB Fintech, Keynes, like I said. Yeah, since we're talking Keynes, now that it has a direct bearing on the listed stocks, this whole business of don't make iPhones in India, I don't know if that will cast a shadow on the EMS guys. Your thoughts?
No, I think EMS is fortunately much more broader than that. And the government's already kind of undertaken a lot of steps to, again, build some self-reliance. The new Jaywar project that was announced on Semicon, it's clearly a step in the right direction to kind of de-escalate these tensions or worries or whatever. But, from going back to the results, I think what's remarkable about yesterday's earnings calendar is that most companies have reported very decent improvement in revenue and or profits, which doesn't usually happen at the fag end of the earnings season. But this has been quite a surprise. It started off very subdued, but things are looking up. And one of the companies that I really like, and it's also reported decent earnings, is Datamatics. But there's so many of them. I mean, you have Arvind and you have Keynes, and there's so many which have done well. But I believe if you look at some of the companies that were not posting very great earnings or improvement in earnings, wherever there's a delta there, you probably see some market appreciation and people kind of start looking at it attractively. So that's the whole thing. But yeah, quite enthused by the kind of earnings that we've seen yesterday.
Okay. All right. Prakash, stay on. I thought that would be the last question, but no, we need to discuss IndusInd Bank with you as well in more detail. Prakash, IndusInd Bank, let's pull up a longer chart. Today it's down 7%. But the problem is every time the believers and the buyers have gone in thinking this is the kitchen sinking quarter, this is the worst, it's over, the asset has good value, it's a fully functional bank, more skeletons keep tumbling out. And it's all about, like Ritu was saying, the questions are on, how are you running the bank? What is the governance standard? How do you make a mistake worth, 1,900 crores, a mistake worth 675 crores? Your thoughts on, what investors should do with this now?
So it reminds me of the old adage which says there's never one cockroach in the kitchen. And at this point, it's just a simple falling knife. You really want to kind of try catching it. And the answer is obviously not. What will turn things around is a complete change in the way the bank is run, in terms of maybe it could be the reset of the management. And after this, I would be surprised if RBI intervention comes through in a significant way. So it will take much longer than what people would anticipate. So if you're expecting this to be glossed over by the market, I doubt if that can happen. It's too large, as you rightly said. And look at the pernicious nature of what's happening. It's not something just about the amounts, but you can't be doing these things for a significantly large financial play. So stay off is, of course, but unfortunately, there are a lot of people who have been caught. If they get an exit, I would believe that it makes sense to book a loss and not kind of, wait for any rebound just on the basis of some turnarounds.
Okay, all right. Prakash, appreciate you joining in. Wishing you a good day ahead and an even better evening. For the time being, we'll let you go.